Hello and welcome to the day ahead. It is Thursday, April the 30th. I'm Andrew Gagan. Well, the local market's losing streak is set to continue, with ASX futures off by around 0.8%. Oil prices have soared on fading hopes of reopening the Strait of Hormuz, putting further pressure on global equity markets. On Wall Street, the focus for investors was the US Federal Reserve's decision to leave rates on hold, with the three major US stock indices gyrating after the policy statement revealed the most divided decision in more than 30 years. This came ahead of the earnings results from 4 of the Mag 7. Alphabet shares were about 4% in extended trade after it topped estimates for quarterly revenue and profit, as enterprise spending on AI delivered the best quarter of growth for its cloud unit since the start of the AI boom. The Google parent company total revenue rose 22% to almost $110 billion in the first quarter. Amazon reported cloud sales growth above expectations, driven by strong enterprise spending, although its shares dipped around 4% in extended trade for projected current quarter operating income on slightly wider downside ranges from the current midpoint estimate of around $22.5 billion. Meta raised its annual capital expending forecast to between $125 and $145 billion, doubling down on its decision to plough billions into AI infrastructure, even as it seeks to cut costs with planned layoffs. Shares of the company falling more than 6% in extended trade. Microsoft's modest increase in quarterly cloud revenue growth failed to impress investors, worried about rising competition in the AI race, sending its shares down around 2%. Revenue at the company's Azure cloud computing unit jumped 40% in the period. Elsewhere, Qualcomm forecast third quarter revenue and adjusted profit below Wall Street expectations, but upbeat comments about a recovery in core markets and business centre data also sent its shares up around 10%. And Ford lifted its annual guidance by $500 million, aided by significant tariff refunds, but said it still faces rising material costs. Well, the Federal Reserve has held interest rates steady, but in its most divided decision since 1992, three policy members said it was no longer appropriate for the central bank to communicate a bias towards lowering borrowing costs.
Inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that three people dissented over the language. I think all of those people agreed with the rate decision.
This was Jerome Powell's last press conference as Fed chair, but he will remain as a central bank governor because he says he's concerned about legal attacks on the Fed.
But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors.
And the Bank of Canada has kept its policy rates unchanged at 2.25% as expected. And in the latest developments in the Middle East, President Trump has said he will not lift a naval blockade of Iran's ports until he secures a deal with Tehran to address the country's nuclear program, extending a standoff over the Strait of Hormuz. US Treasury yields rose to a one-month high after Federal Reserve officials held rates steady, but signalled growing concerns about inflation. The US two-year yield rising to 3.94%, the 10-year up to 4.43%. Australian three-year government bond yields rose to 4.78, the 10-year at 5.09, with markets pricing in a 75% chance the cash rate will be hiked by 25 basis points at next week's RBA meeting, and 100% chance by June. The US dollar index is up around 1/3% on the day. The Aussie dollar has tumbled to 71.2 US cents. Oil prices have surged to their highest level in weeks after President Trump rejected Iran's proposal to reopen the Strait of Hormuz, with prolonged disruptions to Middle East supply set to continue. Brent crude futures for the 8th session rose to be up around 8% to hit $120 a barrel for the first time in almost 4 years. US West Texas Intermediate futures rose almost a similar amount to $107 a barrel. Gold extended losses to fall to a one-month low. Spot gold down around 1.5% to close to $5,440 an ounce. Copper fell close to 1%. Iron ore rose to $110 a tonne. And Bitcoin is currently trading at around $76,000. On the data docket locally today, we get March private sector credit and first quarter export prices, and quarterly results are expected from Boss Energy, Capstone Copper, Liontown, Mineral Resources, Stockland and Woolworths. That is your day ahead. We'll see you again tomorrow.